look, it's clearly sanctioned by Western central banks, channeled through Benoit Gilson's Bank of International Settlements gold desk in Basel, Switzerland. We know his footprint so well. 6 o'clock in the morning usually is when it commences.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and an early holiday present, because one of the things I'm grateful for this year is that after years of studying and listening to Andrew Maguire's interviews and really shaping my own perspective of the gold and silver markets, now I'm quite fortunate to get a monthly chat with Andrew that I get to share with everybody at home. So Andrew, is great to see you again today. Happy holidays. How are you doing over there, sir?
Yeah, great to be with you, of course, Chris. But yeah, you can see I've got the woolies on now. It's snowing in Liechtenstein. It's raining here back in the UK, and I hear you're by the pool. I mean, that was a very nice thing for you to tell me this morning.
I mean, come on over to Austin. I believe, let's see, I think it hit 80 degrees yesterday for our international listeners.
Perhaps we just stop right there, because I think we that's just making me want to hop a flight right now.
Well, so, I'm glad to hear that. That means we're getting a little buzz already for a mid-year. Now, we had Silverfest in September. People have asked about another Silverfest. I feel like it should be like the Super Bowl. There's just one per year, but that at the same time, I keep talking with so many people who want to do something in person. So maybe we will get you here in Austin, maybe like March or April while it's snowing really hard there in London. And I'll round up a whole crew of silver experts, fans, companies, and really bring Silverfest in person. Andrew, real quick before we get started, today's video is sponsored by Miles Franklin, where you can get, in honor of Andrew's mother country, there's this Silver Britannia offered at $329 over spot. And just, you can find out more about that. Pricing on anything else if you want to get, because Andrew's silver and gold are great Christmas presents too, am I right?
Well, I mean, does it get any better? It certainly doesn't get any better than that. Yeah, I agree.
Yeah, so Arcadia at Miles Franklin to find out more about that. And you place an order for those Britannias. I'll even throw an audio copy of the big silver short, which is kind of disappearing in my, there we go, which Andrew, you were in. You provided an incredible chapter of. And perhaps to start off today, she got a call from an Arcadia superfan named Chris Mack this morning, who reminded me that there's a lot of new people coming into this, and many don't know really how you got started in this whole saga of silver manipulation, becoming a whistleblower. And perhaps for anyone hearing it for the first time, you could just let them know where this began.
Well, I guess it really began pretty much after the JP Morgan raid. And that was, well, actually, how many raids? There was many raids. I'm talking about in 2009, 2008, 2009, when JP Morgan took over the Bear Stearns position, it became pretty obvious that they were coming in on the wrong side of the market. And obviously that was to do with the bailout of Bear Stearns, etc. So, but we started tracking the footprints, and sure enough, we then discovered that these guys were setting a price ahead of the market open on a regular basis, and sharing that amongst some insiders. And we managed to crack into that. And then we then basically provided that evidence to the CFTC. Long story short, I mean, this is obviously a span of several years. We provided that evidence to the CFTC, and in live time, we'd say, look, here's where the price is going to be tomorrow, in 24 hours from now, at the PM fix, and silver and gold. And to the tick, I mean, usually to the tick, the price of silver jumped, and gold jumped right down to that price. So essentially, let me just get this here. And essentially, what we did was said, look, if this is going to happen and we can tell you about it, why don't we sit with your policeman? You put the policeman's hat on, assign me a regulator, and we'll sit down and we'll go through. So we signed some waivers, one thing and another, and basically started to work with one of their guys, which I know we published the name of him. It was Iliad Ramirez back in 2008, and I basically said to him, look, here's what's going to happen tomorrow. Let's get live. I want you to start pulling some trade tickets because this is going to happen exactly as we say it's going to happen. How would we possibly know this is going to happen? Sure enough, it happened. Well, okay, so it happened quite a few times. And when I say quite a few times, a total of 88 times to be exact. And obviously he wasn't involved in all of those 88, but it was sufficient to know that maybe there was the first 5 or 6. And so I said to him, look, you've got to, we've got to escalate this. Clearly there's something going on here. If we can pick a price and we know this price and we know where it's being set, then obviously that's not good for the market. And yeah, by me disclosing it, obviously it prohibited me from trading, from insider trading, but it's more important, what we were looking at then, Chris, as you know, was the 2008 crash involved real people. It's not just the paper market. It was Bolivian miners, for example, was a perfect example where, we're talking about very proud people who had, from generation after generation, had been mining silver, grandfather, father, son, and suddenly the price of silver smashes down from 22 bucks down to 8.5. Well, making it non-viable. And then, these mines got shuttered, and then there's no social system there. And these guys put out of work. And to the point where we know, we have evidence that there was at least one suicide of a very proud person who could no longer provide for their family. And so really it was that aspect of things, the real human side of this story that really made us want to actually get this thing addressed. Yeah, we can all make money. You know what? We can all make money in a proper way. And there's no need to have that kind of an inside track. And certainly when you start to mess with entire livelihoods, that was the issue. So that's why we presented it to the CFTC rather than trading it. A lot of people ask me the question, you're crazy, you could have made billions. Yeah, we could, but there's better ways of making money. And life's too short for that kind of bullshit. So essentially, then these 88 examples came out. I finally sat in front of the CFTC, wasn't doing an awful lot. We sat in front of the DOJ, presented it personally in the DOJ offices in DC, and showed them a presentation of pick as many as examples. Here's 88 examples. Pick as many as you want. Drill down. Here's the actors. Hey, a lot of these bad actors have popped up. Their names have popped up several years later. You've heard them all. JP Morgan guys, Deutsche Bank guys, Scotia Morgana guys. These guys are sitting on the fix, setting the price of gold and silver. So, yeah. And of course, you also spoke to our very good friend, Bart Chilton. God bless his soul, because he is gone now. But it was thanks to Bart that any progress was made at all. And because the CFTC was ignoring everything, even though they had all this evidence, they could have been pulling the trade tickets. They must have known who was behind these trade tickets. And when you were sitting there with them live and you say, hey, look, silver's about to move. You watched it going to move from here to here in the next probably 2 minutes. Pull all the tickets. When it happens and nothing gets done. So as you know, then there was an email chain. I said to Ramirez at the time, if you don't actually do anything, I'm going to publish. I agreed to keep this confidential, but I'm going to publish our email chain. I'm going to put it out there. Didn't hear back, so I put it out there. So, and that's where it started. And it goes on today. This is actually, we're now seeing a lot of these bad actors being charged. Yeah, slap on the wrist for many of them, but there is some jail time coming. And but these guys that were sitting very high up at board level, setting the price of gold and silver fixes. These are the guys that we really are pleased to see finally get some form of comeuppance. But so really, that's it. So we joined the Whistleblower the program long before there was any kind of offers of money or anything like that. It wasn't about that. It was literally about spilling the beans on bank robberies that were occurring on an almost daily basis.
Yeah, Andrew, I really do appreciate that you mentioned that, because everything you're describing, it's as you're saying it, my mind is picturing I'm back on the New York Stock Exchange, my option post, reading about these things, following it. And I think that same emotion you described where, yeah, especially if you're able to get into finance. I mean, yes, you can make a lot of money. I was doing decently well, but there was something about, it was almost like, well, I studied and I found all the factors lead to gold and silver, but then the price just makes no sense. And then you start seeing it in the other markets, and it's almost like, there's something, if you believe in doing what's right, there's you see a crime happening and people getting stolen from, cheated. You talked about the mining impact, but it's almost like, what's the point of having markets if it's just, it also takes the fun out of it, the strategy, the joy out of trading, which in its inherent nature can be beautiful and fun and provide liquidity to a market that can make life better for people. And you talked about the things that you showed these regulators. So I'm curious, and I know I've asked you this before, but all right, now it's a month, 2 months later after JP Morgan's been fined, and I get tons of emails of people writing in, here's the Sunday night, or here's Monday morning, it's around 24:20, then just falls off a cliff. I'm not going to play the Bart Chilton clip again today. We've gone through it however many times. And one of the things that I noticed was interesting because here, that exchange you talked about with Elliot Ramirez, Gaddis still has it published. And you mentioned somewhere in there that depending on how the news comes out, rather than just smashing it down, they actually let people get on board when you would think, hey, this news indicates gold and silver should soar, so people get on. And then they really get like a couple more people to rip off before they hammer it down, which I don't know. It's like, I'm curious, what do you see on this? And then a couple hours later shoots $1 higher. What people love to know your impression of this one this week.
Yeah, well, I think, I guess really, we're kind of talking really about the last 4 months of gaming. Obviously there's been a slap on the wrist. $1 billion fine is a slap on the wrist for a bank that made more than that trading gold alone. But really this last 4 months of gaming, it really concluded last Monday. And I think this is important because people are saying, well, where's the end to this? When's it going to end? Well, there's several things going on that will end this, and we can perhaps cover some of them today. But basically, it was all about Bank of International Settlements options expiry last Monday, the 30th of November. And what I can do is obviously can give you the aspect of what we see from a wholesale market perspective, because to be honest, that's really where you're going to see the footprints. But as a result, and we say this is official, it has to be officially sanctioned, because given the enormous amount of new regulations, transparency, okay, we talked about transparency, it's a hell of a lot better than it was, but the very fact that regulators are all over this, you wouldn't be crazy as a bank trader, unless you had a free pass, you would be crazy to be involved in a Monday morning sell at 2 o'clock in the morning when there's no one around. Usually the Bank of International Settlements come into play around about 6 a.m. UK time. We know their footprints. We know Benoit Gilson's double trading desk there. That's the time of day when if they're going to do something, they will do it then. But I mean, you'd be crazy given the regulations, people going to jail for spoofing, and obviously these these efforts that we're saying are usually triggered by some form of a spoof. And it's very easy to hide with it's a 99% algo-driven market. So you can actually hide a lot of footprints that way. But it's really these official efforts to contain the dollar price of gold. And we estimate that the Bank of International Settlements mark-to-market event, that likely squared close to $1 trillion of offside gold derivative bets last Monday. Now, this actually marked the lowest gold fix since June, where it looks like the bulk of the 6 monthly bets against gold were made at that time. But because if you look at the option structure, and I know you're a deep options guy, but that can really give you a good insight when weighed up against the action. These bets look to have made back then at around about 1780, under 1800 anyway. And they were made, as we know, the Bank of International Settlements, we covered this, I think, a time ago or a time before, about that they don't actually use allocated gold. They use unallocated leased gold entering the market. Now, these bets were clearly deeply underwater after gold really threatened to break through 2100 back in August, when this defensive action commenced. So if you go back to a chart, and you can see suddenly in August, bang, like a cliff, it came down like a cliff. And really, fast forwarding to this last week, and into this Bank of International Settlements, it was important. They're talking about $1 trillion of derivatives here. We're talking about forwards. We're talking about not even talking about options here. We're talking about massive swaps that all relate to this. And so what this, by flushing the gold 200-day moving average, it triggered the very visible margin stops congregated at this very obvious level. Now, we all know this. We all know that the 200 is going to have stops. Either if it's coming from the upside, there's going to be short stops on the upside. If it's coming from the top into it, there's always going to be long stops below that level. It's just the way it is. But furthermore, that the banks that are acting as agent, and also these officials, they know exactly everyone's margin position. They know exactly how much juice to turn on to rinse people out. And it's pretty easy when you're at the 200s, a no-brainer. So you just need to add a bit of juice at this point. But I mean, there's two sides to that story, though, because we'll cover that in a minute. But basically, you're now putting yourselves in the crosshairs. But what it was about was the House needed to scoop some very needed, heavily discounted gold, GLD. I call it gold. It's not gold. GLD ETF. It's nothing but gold credit. And they needed that to help to offset some of the massive overhanging November delivery obligations, which had come into focus around this time of the December contract coming on board. But look, we know, and we covered this before, we know this game changed in March. And the flip side to this mark-to-market event is that banks are not willing to take on counterparty risk. So these guys that have been buying November longs had hedged November longs with a view to take physical delivery of these contracts because of a very tight physical marketplace. So despite the foot stamping that we've seen, and I believe it's over, they were unable to be shaken out. And this has now become an interesting game. In fact, discounting paper further, really what it did was tighten up the offers to sell physical. So it became a really difficult situation. And with supply tight, we evidenced a slew of bank longs seeking to lock in even more COMEX physical for delivery. So much more immediately. So it's important to look at what happened, because this actually is an interesting game. It ends up in a catch-22 situation for these insiders and officials. Now, so more immediately, these November deliveries had to be physically delivered last Monday. That was the last physical day for delivery or to be in default. But although this overshoot was overdone, It also went some way to hedging some of the very large underwater December delivery obligations, which were also accruing. But as I say, it's ultimately dug an even deeper hole for the house. And so from a really, when you think about it, from a wholesale market perspective, there is a consensus view that gold is priced $500 below what is generally regarded as fair value. And that's not even accounting for more stimulus coming into the market. And as a result, physical gold has been in massive accumulation by competing central banks, sovereign buyers. I mean, the trouble being that large size for immediate delivery comes at a very large premium to the paper settle price. So, except that is, if the COMEX is tapped for delivery, and as we evidenced by the unprecedented large-sized November delivery obligations, which came due on Monday, despite all the foot stamping, these underwater delivery obligations were unable to be shaken out, resulting in large premiums being offered to incentivize those standing for delivery to square up positions for a profit rather than taking physical delivery. Now, this is never, look, we've seen this perhaps back in 2011, but I've not seen it since. And look, as we discussed last time, it's not just about obtaining a physical bullion at an unallocated gold price, which is putting, it's not just that, but that's putting the COMEX into the delivery crosshairs for one reason, but it's more that this pool of COMEX physical bullion is the only immediately deliverable source to obtain large size physical gold to fill large size physical bullion orders, which we cannot get. And especially if we've got skeleton staffing in the refineries in Switzerland and Europe. So this has become a catch-22 situation for the CME LBMA cartel. Look, it's not escaped anyone operating in this casino that it includes some of the largest trading banks and desks. I mean, all you have to do, if you think about what happened, is by fully funding and hedging a COMEX long position into first notice day, and then standing for delivery, it's going to very likely result in very large cash offers to not take delivery. Now, in this attempt to stem these COMEX outflows, we actually drew attention to credible sources confirming offers were being made by the house some $40 above spot to incentivize longs standing for delivery to rather choose to settle delivery demands for cash. Now, this became fuel for a very strong rally for obvious reasons. And it was no surprise to evidence gold rise really about in fact, almost exactly $100 since these offers were made, as they drew attention to the extent of the paper to physical supply mismatch. That's telegraphing that the gold price is not just mispriced medium term, but also mispriced very short term. So by this Bank of International Settlements Monday spot gold expiry low, and it was about 1766.40 on the February contract. I mean, offers to settle for cash plus $40 looked like an attractive offer. And given the lack of outflows, it clearly worked. And really, there's plenty of reasons why you would take the profit and then buy another December contract and do the whole thing again. But by the same token, it has potentially opened up a game that will ultimately backfire on the cartel, forcing this paper to physical price to rise. So, I mean, we all know, and we've covered this before, as a wholesaler, we know, and even without conditions being tight, if you want large size for orders in excess of 100,000 ounces of gold for immediate delivery, by electing to take delivery of a COMEX contract, it enables any buyer to sidestep more expensive bilaterally settled physical gold transactions, which will demand a big premium for anything of that size, about 3 tons. So basically, looking ahead, aside from bullion desks continuing to take advantage of COMEX face value delivery contracts, which are deliverable, if the house drives COMEX gold futures into backwardation to spot gold again, it'll once again trigger the catch-22 arbitrage trade. And we continue to have our ear onto the ground on this, but it can only ultimately lead to one thing: higher gold and silver prices. driven by a physical market. Now, this becomes a very profitable physical arbitrage trade, which will undoubtedly draw in whales smelling COMEX blood. But I did go public on the LBMA's attempt to ring-fence physical markets in the most recent Live from the Vault episode I did for Kinesis. But now look, basically, this is not about, it's not all about the 34.7 tons of November deliveries that were seeking real physical delivery outside the casino, because we know that some insiders also play the shuffle the warrants game. We know that. But the very fact that any open interest was exiting in physical form caused a major issue. November's not a contract that is usually delivered, as nor was October. But given the deep backwardations and tight physical market, we know of at least 2 European banks that we personally know that were committed to shipping out bullion as well as taking delivery of the even less friction Loco London vaulted the 4GC contract, which I know we've covered before, which is basically a CME contract that's been cobbled together with the LBMA, where the bullion can actually sit in London. Well, hey, you know, far less friction and the delivery costs are far, far less. But if we kind of do a sum, even if just 10 tons of this, say, 34.7 tons, which have left the COMEX, the cost to pay off these holders not to take delivery would have cost insiders sitting on undeliverable, rehypothecated bullion, would have cost them about 12 million. Now, clearly, even if officially driven, this is an unsustainable trade going forward. Unless the price is allowed to rise in contango to spot, which already is the case in silver, insiders would scramble to exit the paper game well ahead of this trade being jumped on by it for the very large December delivery, which is already deeply, we can see it's already well underway. Nothing's leaving at this point, but again, this makes this trade very attractive. Now, despite aggressive and successful efforts to fix GLD outflows at the gamed discounted spot gold price, although this dislodged some, I think, 68 tons of GLD up until today, that's over the last 4 weeks, it has only served to offset deeply underwater gold credits, because GLD inflows or outflows, and as is the case with the SLV ETF, they don't represent physical bullion priced in the real world. GLD or SLV outflows simply represent unallocated gold credit fixed at a spot price. But when looking to convert this over-the-counter spot gold FX position into real physical, the insider credit holder must still find a willing seller to accept a price for a large size of physical. Now that's where this falls down. This is exactly where it falls down. So while this larger battle plays out, and we know that medium term, we're definitely $500 under where every wholesale liquidity provider, bank that I speak to knows that gold should be, there can only be one short-term solution. Insiders must avoid gold and silver futures entering even a technically backwardated condition. This would essentially force the futures price to rise more in line with true supply-demand fundamentals, being determined by the 10 times larger, more deliverable over-the-counter market. Now, we already see this situation evolving in silver, but gold futures will have to move into contango to spot. And if the spot-related market is not weighed upon by futures, then a legitimate short squeeze will ensue. And we've seen a bit of the start of that. Now, obviously, this is not a straight line up, because you've got a lot of muscle memory here and a lot of sideline money that is basically so used to the Monday sell-off. And we saw a couple of examples of that already this week. An attempted Monday sell-off, suddenly bang, so the insiders buy it. You know, so we're seeing a bit of a change here, because it's only the discipline of the physical side of the market. So, I mean, obviously, very short term, this new factor, physical factor, forces a structural change. Now, these evolving conditions have really undoubtedly prompted the recent CME LBMA attempt to ring fence the global physical market. Now, as this plays out, we also have to look at the technicals driving the paper markets, and they look about as bullish as they can get from a medium and a longer term basis. So it is the leveraging of finance gold positions that has ultimately led to the cartel, underwritten by officials, though, has to be underwritten by officials. And it's led to them adopting a naked short paper gold position to ensure that these index positions, the positions they've indexed to a spot price, stay inside a managed range. Hence, this $1 trillion was out of kilter and had to be smacked down. However, this paper game blew up, if you remember, on March the 23rd. Well, of course, we all know that. And this has given rise to several initiatives by the LBMA and the CME ringmasters to try and ring fence the up until now paper to physical game. And we'll look at these fresh initiatives in a sec, but bottom line, plain vanilla bullion banking without an inside track is simply not profitable without rigging the game. Now, one can only rig the game by disrupting true supply-demand fundamentals, by injecting tsunamis of undeliverable paper gold at important inflection points, as we saw again in smaller way today. By injecting unnecessary volatility, it's an important component of the coordinated PSYOPs operation. Now, obviously, get on Wikipedia, and I know a lot of us know about what this is, and I'm sure a lot of people do. But if you get on Wikipedia and you pull up PSYOPs as a psychological operations, in fact, let me just see what they say. They say PSYOP are operations to convey selected information and indicators to audiences to influence their emotions, motives, and objective reasoning, and ultimately the behavior of governments, organization groups, and individuals, end quote.
I think, Andrew, yeah. I think to save a little time and money, the Fed just copied and pasted that, made that their mission statement, and so now that
did they now? I must check that out.
Actually, it's funny. You know how the Fed used to be just stable prices and full employment? They've added on. There's like a 5-point plan now. It's like they're just tack on, change at will. But anyway, yes, it's quite wild. But please continue.
And that's exactly why the COMEX was ever conceived in 1974, was to basically after the dollar the dollar came off the gold standard. I mean, you needed a mechanism, and it wasn't just to dilute gold, it was to create enormous volatility, to shake the hell out of people, and to make it look like it wasn't a first tier asset. But so really, I mean, look, we've just had 10 weeks of counterintuitive capping. I mean, how many traders and investors do you know, Chris, that threw in the towel last week into this Bank of International Settlements option OPEX settlement, this mark-to-market low, which also dragged silver down? But then you look at the COT report and you see another perfect wash and rinse cycle was executed. But this has come at a cost to the casino, and putting it into the crosshairs, as we say, as a source to obtain physical at a discount. This is not what the COMEX was ever designed to be. Now, obviously, as can be seen by the action in gold and silver, this price rigging still exists. We see it today, we've seen it earlier this week, we saw it all of last week, but I think that's it as far as the lows are in. But look, it's clearly sanctioned by Western central banks, channeled through Benoit Gilson's Bank of International Settlements gold desk in Basel, Switzerland. We know his footprints so well. 6 o'clock in the morning usually is when it commences. And look, this is largely facilitated through 5 bullion banks acting as agent who are privileged to operate gold accounts at the Bank of England, which is all part of the same incestuous relationship. Now, as our very good friend and mentor to me, billionaire and gold mine owner Hugo Salinas Price, as he summed up last week, and I actually made a copy of this here. He said, "A logical analysis of daily action in the New York gold market reveals constant intervention by the US-British banking mafia to drive the price of gold down. A free market price of gold would have the undesirable consequence of revealing the worthlessness of the US dollar, which cannot be allowed to happen, as the US dollar underpins the worth of the currencies of the rest of the world." End of quote. Now, I gotta love Hugo. I tell you, he's one of the most savvy people I've ever met. Very learned man. And look, we discussed multiple attempts, you and I, Chris, about the CME and the LBMA to ring fence the over-the-counter and directly related COMEX markets since they came under attack for physical delivery after the paper market fractured back in March, as we know. Now, we looked at how, out of necessity, these competitors joined forces directly after this exchange for physical blow-up. Now, Chris, as I say, we looked in detail at essentially at this EFP conduit. We looked at it a little more closely, and what we were saying really is this conduit was actually little more than a transfer of unallocated credit positions between the COMEX and the 10 times larger over-the-counter FX markets. And it is this key unallocated credit anchor that has supported the paper game, and that irreversibly fractured. Now, a lot of people think an exchange for physical results in a physical. It doesn't. It ends up in paper to paper. You end up with an over-the-counter position and then you've still got to fill that over-the-counter position with physical. So it's a complete sham, paper to paper. Now, we're currently evident, what we're really seeing right now is a competitive attack actually on this CME LBMA shotgun marriage by some very large global players. And this COMEX LBMA Achilles heel has been exposed after they scrambled to add physical. If you remember, we were saying, look at all this physical they're bringing in from Switzerland and everywhere, hundreds of tons coming in. It was coming into the CME vaults, and it directly after this EFP blow up, it really also necessitated opening up delivery of the cobbled together the 4GC contract, which we talked about, where the bullion is vaulted in London. That was that in itself was a desperation move, and we noted that no one was trading that. That is until we saw a lot of people seeking to take delivery of it. Why? Because it's a hell of a lot cheaper. Maybe you got 80 cents, I say, handling fees per ounce, but it saves pretty much another $1.50 or so in transportation costs. I mean, it's in London, right? So you send a Brinks truck and pick it up. So since then, I think with physical pricing being increasingly settled above spot, both of these physical gold credit pools, and we've got to establish these are just credit pools. They become targets for competitors seeking to fill physical orders at a discount into what would be an otherwise tight physical market. And as we hear from a range of buyers that we deal with, look, it's not just the price that makes COMEX attractive. It's this pool of physical bullion is the only immediately deliverable source to fill very large size physical bullion orders without massive premiums. And so to maintain a rapidly eroding gold paper market, 4 weeks ago, the LBMA cartel stepped up its efforts to ring fence the physical side of their directly linked unallocated paper settled gold credit market. And then obviously Reuters ran with an article. I saw an article on Bloomberg, but basically it's all about a letter was sent to all the major global hub refineries, LBMA demanding compliance to LBMA rules or have their refineries cut off from being local London tradable. I mean, really, this attempt the aggressive move to ring fence the 15 trillion a year gold credit trade has come about precisely due to their fractionally held working stock being targeted for physical delivery. So now they want to contain the physical side. And with Basel III rules coming into effect, we see physical and only physical gold being secured as a cash equivalent asset. So This LBMA CME joint effort is an attempt to halt the erosion of their monopolistic hold over the physical global physical markets. And this is being attempted under the guise of establishing a globally accepted standard under their control, though. However, this so-called standard, as you know, comes from an organization that has harbored proven bad actors and worse, or as we've just evidenced this week, are trying to defend, even worse, a non-physical marketplace that in no way represents a true supply-demand price. And the current price discovery mechanism, they're not representative of what the industry wants. And from a producer all the way to the end user, which is they want a stable, fair price based upon real supply and demand fundamentals. That's what you can do as some. You can know what it's costing you to bring it out of the ground, you know where your profit margins are, and all you need to do is be sure that you have the correct amount to come in at a certain day, and then you know what the price is, not suddenly being diluted with undeliverable paper gold. Now, this is especially in silver too, of course. Now, this is especially important as we head into BIS, the Bank of International Settlements Basel III rules coming into force next March, and is undoubtedly another factor in the cartel's attempt to maintain unnatural volatility into an asset that should be traded like any other cash instrument, such as government bonds, very stably. So this aggressive attempt to ring fence the cartel's game is backfiring. And based upon the feedback we're getting from meetings with industry insiders as late as yesterday, this move has accelerated the path to the cartel's demise as price setters. Now, the fallout amongst the industry titans such as Russia, China, and the UAE has wide implications for the LBMA and the COMEX. The House is reliant on operating within a fractionally held working stock environment where physical deliveries represent little more than electronically matched deallocated gold and silver positions settled by netting out hundreds of tons of gold credits and thousands of tons of silver credits amongst the LBMA banks every single day. Now, this House siloed activity has enabled gold price discovery to be controlled inside the 10 times larger unallocated market, which directly relates, of course, to gold futures. And it is the directly related COMEX leg of the game held in physically delivered form that is under attack. So in response to this strong arm tactic, Russia, India, and the UAE are definitely already in discussion to create a globally accepted standard outside of the LBMA. And I really do expect China to join the initiative. And we're also hearing of and if you remember, we talked months and months, I think it was it was like probably 6 months ago, we talked about the LME coming on board to try and establish a standard of their own. And we're hearing of LME accreditation interest. And why not? This may be a perfect vehicle for the LME to progress its plans to compete with the LBMA with a physically settled global accepted 4/9 contract, non-LBMA standard bar contract. So if you recall, I remember we did raise this discussion, I think it was back in September, when we saw the first indications. I think it was on Bloomberg again, and it was, I think we actually got confirmation of what we discussed in September, which was when we named Goldman Sachs and ICB, as well as ICE, working on such a venture since September of last year, when the LBMA first foreshadows its plans to usurp the refinery under its brand. So I kind of hope, we haven't covered Basel III really, but really I hope that kind of catches up really what's going on and how this game has changed, and really how these guys have shot themselves in the foot. You cannot have a backwardated market when you have made yourself put yourself in the crosshairs for a physical delivery.
Yeah, Andrew, I appreciate you mentioning that, because there are a lot of questions, and people, as you referenced, some people get tired of waiting. In fact, I'm going to read a message I got this morning. I will leave the name private, but I think it's reflective of what I hear a lot. there was someone who wrote in, I think that we are kidding ourselves to believe that silver will go high at some point. I'm tired and so disappointed. If I could call this investment something that could have been plain robbery. And I think you touched on the PSYOP part of it. I do believe there is a lot of effort into getting people to feel that way. So again, why I appreciate that you can shed some light on what's actually going on. So that is part one of this month's call with Andrew Maguire. I think you're going to want to stay tuned for part two, where he talks about what these COMEX deliveries really mean, whether metal is leaving the building, what to look for there, and also he gives his silver forecast for 2021, which I think you'll want to hear. So hit that subscription button and the notification bell. And before we wrap up tonight, was some news out on Reyna Silver this morning. You saw Jorge on the show yesterday. So I'm going to play that for you real quick, just so you can stay posted on what's going on.
Chris, great to see you. Yes, we announced our first drill campaign as Reyna Silver. We received our permits a couple of weeks ago, and then the drill started turning yesterday. And we've put out a press release that gives some details of the specific areas that we'll be drilling. And there's a more comprehensive presentation on the investor section of our website. And of course, anybody can write to us directly at info@reynasilver.com. That forwards to my email. Happy to answer any questions.
Well, I appreciate that. We'll have the link in the description field below. So that is tonight's show. Again, hit that subscription button and the notification bell so when part two is released, you can be notified as soon as possible.